Did you know that during the 2008 crash, while millions lost everything, a few smart investors made fortunes by going after something different? They realized this simple physics principle was going to apply to the financial markets as well. Now, can I let you in on a little secret? I'm supposed to have a slingshot right now for this example, but ain't nobody got time for that. So guess what you get? You get my exercise band and my fancy back scratcher, because you know I got one. All right, so in this example, all right, we're gonna pretend that this right here is the economy, all right? And this, in this example of 2008, was the debt crisis with the housing markets, okay? So the economy that's normal looks like this. But when a crash starts to occur, the economy's stretching and it's getting to a stress point, okay? But if you, much like a slingshot, were to drop something in here, all right? And this gets pulled back. I'm a little afraid it's gonna hit me in the face. You have your investments sitting here. They're smart, they're ready. Instead of crashing to the ground, bow! It goes to the moon, baby! And just like that band didn't simply go back to its normal place, but because of the tension and the pressure, it went further. That's what happens. That is exactly what happens with certain sectors in every major market decline. While many businesses do get dragged down, some, like the 5 sectors we're talking about in this video, and let me tell you, number 5 is a banger, okay? These 5 sectors are set to explode forward to greater heights once the market stabilizes again. So here are the top 5 sectors that'll get hit by the next market crash, but I believe will grow massively in the next decade after the crash. Number 1, blue chip crypto. Crypto is always the Wild West during the downturn, right? It's volatile, it's unpredictable, and when big institutional investors pull out, well, it can feel like the whole market's collapsing. But that's the exact moment smart investors start to pay attention and take action. The survivors, Bitcoin, Ethereum, Solana, and the like, these are decentralized systems that aren't tied to any single government or corporation. So long term, as traditional systems falter, people will increasingly turn to crypto as the new gold standard for independence and security. Do you remember 2022? Bitcoin sank to 16,000. Everyone thought it was over. FTX was in collapse because of all the Ponzi stuff happening there. It was a dark, dark time for crypto. And just a few later, Bitcoin bounced back to over 72,000, proving it's resilient. Why? Because crypto isn't dying, it's just going through growing pains, and that's where opportunity lives. So when you see crypto falling, what's your mindset? Do you panic, or is there opportunity? If you listen to the media, crypto and Bitcoin have been dying since it was born, but it's simply not true. Meme coins may feel like fun and games, but we're talking about serious investing in crypto, not Ponzi and gamey shit. The closer you get to Bitcoin during a downturn, the more secure your investments become. The world is going digital, and cryptos like Bitcoin, Ethereum, Solana, Avalanche, they're positioned to thrive. We're on the verge of something huge with talks of the US government potentially including Bitcoin in its strategic reserves. This move would drastically impact the asset. And while it's volatile, buying in now could be one of the smartest plays you ever make. You might think this is just media exaggerating, but it's really not. Take hedge fund manager John Paulson, for example. He became famous during the crisis of '08 for betting against the US housing market, a decision that earned his firm, Paulson & Co., about $20 billion. But what's even more impressive is what he did next. In '09, as the dust was settling, Paulson shifted gears. He invested big time in Bank of America, bought around 2 million shares in Goldman Sachs, and placed huge bets on Citigroup, JP Morgan Chase, and other financial giants. He even went all in on gold, positioning himself perfectly for the recovery back in '08. Warren Buffett once said, "Be fearful when others are greedy, and greedy when others are fearful." Okay, this kind of thinking is what separates successful investors from the rest. If this is helping you in making, smash that subscribe, like, share, You have no idea what that does to help me help others. Thank you. Ultra luxury brands. Now, in a major downturn, people stop spending on flashy things, and luxury brands take a serious hit. Think about it. When money's tight, no one's rushing out to buy Louis Vuitton or Rolex. So why will they thrive post-crash? Because luxury brands are timeless status symbols. Once wealth begins to regenerate, the wealthy return to these brands to reassert their status. Plus, these companies often weather economic storms better than most thanks to their loyal, almost cult-like customer fan base and exclusive markets. For example, the 08-09 economic downturn shaved 9% off the value of the luxury goods market, but it rebounded really quickly. Why? Because the wealthy never stop being wealthy for long. Plus, brands today are even better prepared for a recession. With improved inventory controls and less reliance on third-party retailers, they're more equipped to navigate economic turbulence. I look at money flows. History tells us that the wealthy tend to get wealthier, which means luxury experiences, private jets, yachts, high-end rentals will grow again after they've been hit hard. The green light for me is when the regular markets start to settle down a bit. Then I watch to see which luxury brands survive, merge, adapt. Once the market consolidates a bit, that's when it's time to make a move, in my opinion. Number 2, energy with a minor in green energy. Energy demand took a major hit during the pandemic. At the peak of lockdowns, global energy use dropped by as much as 25% in some areas, worse than the 2008 financial crisis. But here's what the mainstream media doesn't always tell you. Traditional energy, oil, gas, and coal, they aren't going anywhere. Sure, fossil fuels have been hit hard, with global coal demand dropping by 8% in the first quarter of 2020 due to reduced electricity needs and lower industrial activity. During partial lockdowns, energy demand had fallen by an average of 18%, and in full lockdowns, 25%. Despite this, renewables are expected to continue growing and recover. They always do. And here's the part smart investors are watching closely. While fossil fuels struggle, renewables are quietly taking the lead. Solar, wind, hydrogen, they're becoming regulatory necessities. The world's shifting, and when governments pump billions into green initiatives to continue stimulating the economy, it's not about recovery anymore. It's about massive growth. Here's how I see it. Energy, especially the big players in oil, gas, and renewables, will always bounce back because the world needs power. Just look at what's happening now. Since 2009, renewables have already outpaced coal, and as traditional energy struggles, green energy is set to surge post-crash. When the weaker players get forced out, that's your buy signal. By the way, if you're serious about preparing for the next downturn and want to learn the strategies that'll help you thrive, register for my Money and Crypto Masterclass. I'm going to walk you through exactly how to set yourself up for success when the markets tank. I'll drop the link below. Now, let's look at the S&P 500. 3. American economy. The S&P 500 hit rock bottom on March 2009 during the Great Recession. It was the biggest drop since World War II. But what happened next? In just 4 years, it not only recovered, but it soared past pre-crisis highs, breaking through the levels it hadn't reached since the 2000 tech bubble. To put that in perspective, it took 12 years for the S&P 500 to break through the tech bubble highs and hold those gains. Yet the rally didn't stop in 2013. It kept climbing for another 7 years. And I want you to see that's a pattern. To put that in perspective, it took nearly 12 years for the S&P 500 to break through the tech bubble highs of the 2000s and hold those gains. Yet the rally didn't stop in 2013. It kept climbing for another 7 years. And I want you to see that it's a pattern. After every major crash, the S&P 500 has always come back stronger. The same thing happened after the pandemic. In early 2020, the index hit an all-time high, then crashed by 34% when the world shut down. By February 19th, 2020, the S&P 500 reached a new all-time high. By February 19th, 2020, the S&P 500 had reached a new all-time high of 3386. But the pandemic quickly sent it crashing down. Just over a month later, on March 23rd, the index plummeted 34% to 2,200. The US economy took a severe hit as well. The GDP declined by 32.9% in the second quarter of 2020. Compared to the previous year. However, the bounce back was swift, with GDP rebounding by 33.4% in the third quarter of 2020 and continuing positive growth into Q4. The S&P 500 mirrored this recovery. After hitting its pandemic low, it surged to 3756 by the end of 2020 and kept rising into 2021, closing at an all-time high of 4766 on December 27, 2021. Although the index experienced some decline in 2022, closing at 3790 on October 4th, by April 2023, it had recovered to 4,091. History shows that markets, especially something as robust as the S&P 500, they're resilient. Even after significant declines, they not only recover, but often surge to new heights. The key is recognizing that downturns are part of a cycle. And when the market stabilizes, it's an opportunity for long-term growth. I told you number 5 was gonna be a banger, so I'm glad you stuck around. Number 5, AI automation and robotics are inevitable. A market crash won't change that. In fact, a downturn is the perfect time to grab these companies on the cheap. Why? Because the AI market is expanding rapidly with a compound annual growth rate of 38% projected from 2022 to 2030. By 2025, an estimated 97 million people will be working in the AI space. The market itself is expected to grow by at least 120% year over year, and 83% of companies are already identifying AI as a top priority in their business plans. The trick is avoiding the fringe tech and focusing on companies with real traction, not just hype. Take Netflix, for example. They're generating $1 billion annually just from automated, personalized recommendation. And it's not just big names. 48% of businesses use some form of AI to harness big data effectively. Heck, my businesses are using AI. We're witnessing the next industrial revolution, and it's going to accelerate post any crash. Whether you're looking at Nasdaq's QQQ or ARK ETFs, these funds offer broad exposure to the companies driving the new world economy. The key is to get in while prices are low and let the future unfold. Now, if you thought that was good, here's another bonus sector worth keeping an eye on. Healthcare. According to verified market research, the global healthcare market is projected to reach over $665 billion by 2028. The COVID pandemic has forever changed the healthcare landscape, accelerating the adoption of new technologies and care delivery models. More patients are now open to virtual health services like telemedicine. Your boy here loves it, which has pushed many organizations to improve and expand their digital healthcare offerings. We're on the brink of advancements so rapid, it's hard to even truly comprehend what's coming. We could soon live in a world where people regularly reach 150 to 200 years old, and the aging population, especially the ultra wealthy, will spare no expense to extend their lives. The potential in healthcare is immense, and as technology and innovation continue to transform the sector, it's poised to grow exponentially in the years ahead. So what's it gonna be? Are you gonna watch from the sidelines, or are you gonna take action? Now, I'm not a doom and gloomer. Crashes happen as a part of natural cycles. And I'm not saying to stop investing and just wait to try to time the market. What I'm saying is when the next crash comes, what are you gonna do? The opportunities will be there for those who are ready. Will you? Get started now by joining me in my Money and Crypto Masterclass. The link's in the description. Grab it now. Until next time, you keep living your life to the fullest. I will see you in the next video right here or here. Peace.